Good afternoon. Thanks a lot for inviting us once again to your beautiful office. It's really picturesque. Is the market as picturesque for you?
Yeah, it couldn't have been better. We have such fantastic run in terms of the build-up of domestic investors' confidence in the economy and whatever is the governance and the political setup right now. That even ahead of the earnings growth or whatever is to come in the future, the market is having full confidence. And one of the most redeeming feature of this market is that in last, say I'm there for last 35 years,
Yes.
but I have seen the institutional investing happening in last 25 years,
Yes.
starting from 95 or so. But I have never seen DII, domestic investors, asserting in a absolutely, unquestionable way the way they are doing it now. And we have seen it in 2003 to 2007, but this looks to be very different. Ahead of the earnings growth, the build-up which we are seeing, and absolutely relentless. Even the foreigners are kind of taking a back seat, and domestics are really ruling the roost.
But does it get scary beyond a point, Ramdeo? Because valuations have gone out of whack. We are saying that this is basically a bit of a trust that retail investors have had on the market now. Is it getting a bit scary? You think the kind of money that's chasing equities now?
So every match is like a new cricket pitch,
Yeah.
Every pitch is different. So this is again a different pitch. You have to see. Investing is investing opportunities come in different colors and different kind of themes every point of time. Right now, clearly, the market is very narrow in terms of performance,
Yes.
and money is pouring in. Hence, that particular segment is being chased by everybody. So clearly, to that extent, it is far more expensive than what we are used to seeing those companies. But probably we are getting very cheap. Like you could buy HDFC Bank in the growth history between 96 to say 2002-03, when they were growing at 40-50%, you could buy it for 15-20p multiple. Today, the 40-50% growth bank, not exactly same stature, but that type of bank, you'll not get it for less than 40p. Now, clearly, if you work it backward, you should have paid 100p for HDFC Bank at that point of time, but you got it for 20p. So, aligning with the new reality is what is the game in the market. But clearly, individual stocks might look expensive. Clearly, it looks expensive compared to the past. But if you look at the aggregate market cap to GDP, it is still less than 1. So I would think that excesses might be happening in particular the thing. And even if you see the corrections, like you look at the IT sector, look at the pharma sector, huge segments of the markets have been corrected deeply. So it's not that only excesses are happening. There is a deep corrections also.
The reason I asked you that is, your own personal wealth, of course, is now, locked into this Motilal Oswal Focus 35 fund. And, 5 or 6 stocks account for 81% of portfolio. You don't need to, you don't see the need to sort of change the portfolio around. The same HDFC Bank, the same IndusInd Bank, the same Eicher Motors, the same Maruti. And I've been asking you this question, I think, practically, every time I meet you. But these stocks, at every level, they are making money for investors.
Yes.
So what's going so right for some of these stocks?
No, we are not looking at the performance. We are not looking at the stock performance. We are looking at the company performance. We are completely focused on to the company performance. So long as the company's quality of the franchise remains intact, the managements don't do funny things, and their growth is intact. And the valuations are not completely outlandish. If there is a 100p multiple for HDFC Bank or something like that, I think we'll also take our own call. So long as it is
in HDFC Bank, you don't think are still expensive?
I think it is one of the most reasonably priced kind of a stock right now.
Okay.
In relation to the rest of the market, these are the stocks which are very reasonably priced. Because market itself is slightly heightened in terms of valuation very clearly. Because it's waiting for the earnings growth explosion to happen, which has not happened so far. So clearly, markets are always relative. And getting at 24, 25p multiple for almost same amount, same type of growth, maybe 20, 22%, 23% growth, is fine. They are the dominant position companies. They have the huge market shares. and they are gaining market share.
Which is what I was asking.
Yeah.
Can they keep adding more market share?
Yes, I mean, we can discuss HDFC Bank not just because of it is in the portfolio, but per se as a lead
Obviously.
bank, it is the second largest market cap company with 4.5 lakh crores kind of market cap. But the way we think, I mean, I'm telling you the framework of how we think. I mean, whether we are right or wrong, only time will tell.
Yeah.
You know, but the way we think is that, see, there is a value migration on. I mean, one of the biggest value migration in India, where your state-owned banks, which were at the commanding heights in 95, they were literally 100% of the market share. Today they are about 65-70%, and the whole thing is struggling right now for the capital, for the NPA issues, for the business model, for the consolidation. Whole lot of things are happen, and it will happen. I mean, almost the time has come when things will happen, but yet it has not happened. So the entire 2/3 of the market share is shifting for the 1/3 of the share. So even if you have a 10, say 12 to 15%, at least one time nominal GDP or 2 times nominal GDP will be the growth rates. So if your nominal GDP grows at about 10-11%, still 20% will be the banking growth. And in that, you have the huge shift from the big chunk glacier is melting to this 1/3 side. So I think you have a multi-year run. If SBI can be 22% market share of the entire nation, why HDFC Bank has to remain at 5-6% or 7%? Don't you see that kind of opportunity? I'm seeing only opportunity. Whether it will happen or not, how far they can run, how much competence they have, how much determination they have, only time will tell.
You know, so obviously, you know, as you said, you know, we're not discussing this only because you have large holdings in HDFC Bank. But do you think something similar could then play out with the other, you know, private sector banks as well? You recently had invested, of course, in RBL. You know, there are a couple of others which are emerging. You may not want to talk about it, but a couple of some small finance banks have also done well. Do you think that will percolate down to some of these banks as well?
It all depends on the management team's determination and their own, you know, pig-headedness. You know, that determination to execute what is the game plan. You know, how much vision they have and how much they are determined to realize the vision. You know, and the vision of, say, HDFC Bank was very clear in '96 itself.
Yeah.
If you see the CEO, you know, I mean, they have one CEO for last 20 years, 22 years, and it still is continuing.
Yes.
So he's a one-man army who kind of built it across on the great brand equity of HDFC, and of course advised by all the, you know, Mr. Parekh and all of them. So you know, it's a confluence of events that this kind of companies come up. Yes. So if there is another one which is, see, opportunity is there for 3 more HDFC banks to be created, clearly. Now which one that will be, that only time will tell.
Oh yes, that time will tell.